And we are live. Welcome, Friday, April 12th to the Meet the Lenders. Super excited to have the panel here again, talking about best practices in lending. What's the best way to get the financing you're looking for, how to present yourself, what does the marketplace look like right now? We also have Lucy from the SBA that's going to give a short presentation to kick us off. Overall, this is really meant to save you time and money to be able to move quicker through the lending process, answer any questions you might have. You can always follow up with the lenders. They're going to put their contact information into the chat for you to be able to follow up with them if you have any specific questions that need more of a one-on-one follow-up. My name is Brandon Napoli. I'm the director of the South San Diego Small Business Development Center. I also manage the finance team for the San Diego Imperial Valley Small Business Development Center network. And we're here for the next about 55 minutes to answer any questions regarding lending. So with that, Lucy, we'll let you kickstart with the SBA. We're very grateful for you to participate today.
Thank you so much. I appreciate it. I'm gonna, well, I'd love to share my screen. Can you
Yes.
enable screen share? Thank you so much. So I'll share
You
just a
have
second.
permissions.
Thank you very much. I appreciate that. So let's get going really quick. Perfect. So I'm Lucy Montgomery from your local SBA office, and I just want to welcome you and thank everyone for attending and congratulate you for finding this particular webinar. I think you'll be, after the webinar, a lot more educated, and some of you may even find a key to success. We have heard that before about this. I'm going to turn off my video so that you can see my screen because I'm going to do a couple of slides real quick just to teach you a little bit about SBA services and to let you know about what we have coming. So here we go. The SBA for 70 years helps you start, grow, expand, and recover. But not just that, we help support and defend small business wherever we can. This particular webinar is about access to capital. And this is a very, very important topic to the SBA, and we have several programs that help. How the SBA helps with SBA-backed loans, private investors, research and development awarded funds, and we help with surety bonds. If you need help with any of those, please reach out to us. This particular webinar, we're going to focus on SBA guaranteed loans. And how we're going to do that is first, I'm going to let you know SBA loans work in the background. So you set up the loan with the lending partner and the money goes directly to you, the small business. The SBA works here with the lending partner in the background. What does that mean? And why do we back up loans? We guarantee loans with the lender so that the lender can offer competitive terms, lower down payments, flexible overhead, and counseling and education to help you and your business succeed. So you can use an SBA loan, basically anything you can use a regular business loan, including startup, including purchasing, grow, repair, purchase inventory. You can even use it for exporting or purchasing real estate. There are several different types of SBA loans, and each one has a little bit different requirement. And also there are multiple SBA lenders and non-SBA lenders who offer sorts of loans that help specific niche industries or specific niche issues. These are our SBA products, and I'll just go through them. A 504 loan is our commercial property loan. If you would like to buy your building and you own or occupy it with only around 10% down, the SBA can help you with a 504 loan. Our 7A loan is our flagship business loan. That funds your working capital, anything, even startups. We have two versions, Community Advantage and International Trade Loan. That's for exporting. And our micro loan is where our micro enterprises get started, and that's 50,000 and under. I'm just going to note that these loans on the top portion are available through our partner lenders. Okay, not directly to the SBA. So a lot of people are surprised at that you don't call the SBA for a business loan. You call lenders like the lenders on this call. The time you do call the SBA or FEMA is for disaster loans, and I put that in a little gray rain cloud. We recently had a disaster. If you had flooding and you had some damages, you go ahead and go to disasterassistance.gov and take a look at what might be available to you to help you recover from that flooding damage. Also, we were direct lending during COVID. If you did receive COVID loans, it's time to start repaying. I'm happy to announce, if you didn't know, that we have a new portal, which is more user-friendly. Thank goodness. You can get onto it by lending.sba.gov. Be sure you're in the .gov website anytime you're going on any government website. Unfortunately, there's a bunch of fraudsters out there. If you have any trouble, please call this number that I have on the screen now. Is really, really important to make sure you connect with an actual SBA personnel or a trusted lender. If you have a PPP, you need to apply for forgiveness as soon as possible before these loans are sent to the Treasury for collections. You do not want that to happen. Here's a number to call SBA if you need help on the forgiveness, and here's also the SBA PPP forgiveness platform. If you don't know whether you've applied for forgiveness, give SBA a call at that 800 number and make sure you get that done. You can secure a lender, an SBA lender, directly online at SBA Lender Match. But you'll be excited to know that the San Diego community has amazing lenders, and we have just such a great network, and you'll see some on this call, that we recommend before you go to and do it online and maybe make some mistakes and get a no, that you make a smart choice and speak to one of your SBA resource partners. For example, your SBDC, your award-winning, I might say, a regional center of excellence, is putting on this program to help you get a yes from a lender. They'll help you with business plans, expense sheets, financial statements, and projections, or connecting you with a lender that helps with the industry that you're in. There are, if you're not from San Diego and you just happen to pick up this call, there are 1,400 offices nationwide. In San Diego, these are our partners, and I want to highlight the good events going on from the SBDC, particularly this event. This is how you connect with them. You simply log on and you can get a free business advisor directly from them. These other agencies also available free business advisors to help you. Ongoing classes. It's just amazing the network that we have of small business advisors that can assist you. You do not have to go it alone. There is support for you. I also want to just announce that the SBA Emerging Leaders Program, Thrive, is open for applications now. If your business is ready to scale, this is for businesses that have been around about 3 years or more. We offer a free 6-month business development program, and you can apply now. It is competitive, so be sure you get your application in on time. I think I'm done with my 5 minutes. So if you don't already follow us on our X page, we do real-time information, including announcing classes like this one and other useful information for San Diegans and Imperial Valley. And also you can sign up for our newsletter at our website, which is listed here. Thank you so much. I'm gonna stop sharing as soon as I can, or you can stop for me if that works for you as well. I appreciate your time, and thank you, Brandon, and all of the lenders and SBDC for the amazing work you do here.
Awesome, Lucy. Great presentation. Makes me need to realize I need to step up my own game here with my own presentation. So we're gonna get kicked off with the lenders here, just on what I see on the screen. So we'll start with Luis, then Andrew, then DeWitt, and then Fernando, and keep moving down. I just want to start overall with just if you can give a brief overview of the loan programs and eligibility requirements. That includes the 5 C's. Do you do loans to startups or just existing businesses? Feel free to kick us off, Luis.
Sure, thank you. My name is Luis Gutierrez. I am with Founders First Capital, and following in the same line that Lucy was telling us in the presentation, all the participants here, we lend money in a different way. So I think the most important thing is realize which one is right for you. In my very personal case, Founders First Capital is a disruptive way to get resources or growing capital. We don't ask for collateral like your house, and we don't ask for equity if we invest in your company. We might ask for warrants though. And we can allocate, like we are an investment firm, and we can allocate all the way from $50,000 to $2 million. We like to be in business to business or business to government. And because we have this product that is called revenue-based financing, and the way that you're going to repay whatever we invest on you is with a percentage of your monthly sales in a term for 3 years of until 5. We like to be in the industries where the margins are higher, like tech industries, software industries, or pharma industries, or even consulting industries. So that's who we are. Like I said, we are a disruptive way to get your working or grow capital. And that's it.
Awesome. Thank you, Luis. Andrew.
Okay. Good morning, everyone. I'm Andrew Crone, Senior VP, Marble Bridge Funding Group. We are a commercial finance company, 25 years old. I've been here going on 24 years now in sales and underwriting. And we are a direct lender, and our specialty is accounts receivable finance. And we also do some purchase order and contract finance. Basically, the clients that come to us are invoice-based. They provide a product or service to another business or government entity, and they invoice and they get paid in 30, 60, 90 days. And what we do, and this is a $1 trillion industry, we help accelerate the funds so you get the money a lot faster. We have no minimums. We can fund up to $5 million a month. We have probably the easiest underwriting on the panel. And we work with startups. The company is about 50 million a year in revenue, but most of them are about 100,000 in revenue to 20 million, what we specialize in. And if we have a full package in hand, we can get you done and funded usually within 10 working days. And if you're working with me, which you would be if you follow up, I will make you an expert in what we do. We'll teach you the whole business model. I underwrite it. I look at your numbers, and I can figure it out usually within a phone call if I think there's a fit here. That's it. Thank you.
Thank you, Andrew. DeWitt.
Hey everyone, I'm DeWitt with Pacific Premier Bank. I'm the SVP here and the commercial banking manager for San Diego County. Pacific Premier is a commercial bank headquartered in Irvine. We've got branches from San Diego up to Seattle and branches in Arizona and Las Vegas. The loan programs that we offer, they start as small as about 50,000 and could go up all the way to 125 million or more. So really designed to cover kind of the lending needs at every kind of life stage that a business goes through, from getting your initial first line of credit or first term loan for maybe 50 or 100,000, all the way up to doing a $5 million or $10 million term loan or line of credit once the business is more established. The eligibility requirements, we have one product that goes up to 150,000, and it's really a good fit for businesses that have only been around, let's say like anywhere from 3 to 4 years. They might not have a 10-year track record that established companies have, but they're ready to get their first line of credit. So if a company's been around at a minimum of 3 years, that would make them eligible for up to 150,000 as a 3 or 5 year term loan, or 150,000 as a line of credit. Those products are underwritten with just your most recent tax return, most recent business financials, and a couple bank statements. We don't really do startup financing. So if your company has only been around 1 or 2 years and literally you might not even have your first tax return. Doing any kind of startup financing isn't really in our wheelhouse. So with us, lending really starts once you've been in business for 3 years, have your first tax return, have some year-to-date financials, and we can lend for equipment financing, lines of credit for working capital, financing for expansion, vehicles, partner buy-ins, buyouts, acquisition financing, commercial real estate. We're a preferred 7A lender, so we do 7A loans, SBA 504 loans, and also participate in the California Southern State Guaranteed Loan Program.
Up next, good morning, Fernando Ponce with Primary Funding. So we're very similar to Andrew in that we're a factoring company. We also provide purchase order finance. We'll do some lines of credit as well. Been here operating in San Diego for about 28 years now. As far as the type of client, we can work with startups. Personal credit is not really an issue for us. It's more about who you're doing business with. Can we leverage those assets, be it either purchase orders, invoices? Sometimes we'll look at some inventory as well as part of our line of credit mix. And then at times we'll also be able to do even real estate backed lines of credit that we've done in the past for clients of the SBDC in particular. So yeah, pretty aggressive. Typically can do a lot of stuff that the banks maybe can't. And as long as you have the assets that we can leverage, that's really what we're looking for. What's happening now? What assets can we leverage, and does that help the company grow and get to the next point? Thank you.
Thanks, Fernando. Joyce, and then Miriam.
Good morning, everybody. My name is Joyce Parra. I'm from Accessity. We're a CDFI community lender. We've been in San Diego since 1994, so we're going to be celebrating our 30-year anniversary. But we've expanded out. We serve all Southern California. We just offer term loans up to $100,000. We do startups and also existing businesses that want to grow. And basically, the existing business we do are people which are not bankable at the moment. So if you can't get a loan through a bank, please come see me. We look at overall the 5 C's of capital. We're not looking for perfect credit, but we're looking for people that have no charge-offs or any collections. Like we said, we got $100,000. Our average loan size are around $25,000. Our loans get about 1 to 3 weeks to be funded after all the documentation has been received. Thank you.
Good morning. I'm Miriam with CDC Small Business Finance, part of a family of Momentous Capital. And we've been in the industry for 40 plus years. And when you bring our sister company in place, it's been about 80 years. So we know a lot of what we're doing. We're mission oriented. We're here to help you when a bank has said no. We're an alternative lender. And the way that we do our underwriting is just completely polar opposite than traditional lending. We really try to think of logic versus a bunch of rules and regulations. Of course, we lend responsibly. So, we do actually collect the same package as, a traditional lender like Chase or Wells Fargo. But that being said, we don't have a minimum credit score requirement. You don't have to give us collateral, unless you're purchasing real estate or something of that sort. And then our cash flow ratio is 1-to-1, which is also much lower than a bank requires if you're an existing bank. And what I mean by that is basically when we analyze either yourself or your existing business and, what is your income or sales, what are your expenses, and then that money that's left over is really your cash flow, right? So what do you have left over to work with to repay us the loan that you're requesting is what we're looking at. So yeah, we do loans as small as $10,000, and we go all the way up to $350,000 in my department. And our interest rates start at 9.5%, and then the highest rate is 13%. And if you're not projections based, so in other words, if you're not a startup business, if you're an existing business owner, your interest rate could be as low as 9.5%, which is really great. And our term is fantastic because it's a 10-year term. So that just really gives you, we don't have a prepayment penalty. So you can pay us off whenever you want, you know, either to refinance or just because your business is doing awesome. But the point is that there's no penalty, but you still get to take advantage of that long amortization of 10 years, right? So that's really beneficial for cash flow, you know, there's some lenders that only offer, you know, small terms like 2 or 3 year terms. So I'm really proud that we can offer 10 years because that just gives your business more money for cash flow. So I think that pretty much describes it. We're, you know, I've been doing this for 20 plus years, and I think I have a reputation of, if anybody can get it done, I can. I truly, truly care about my business owners. And I truly care about our community and know how much, you know, a loan could really grow your business or keep you alive or help you hire the right people, whatever it might be. So I'm all about you guys in the community, and all of us on this panel. Honestly, we'll work together. We refer to each other all the time. So that's what I love about San Diego. I don't think any of us are trying to just do alone. We're all trying to find what's best for you. And so that is how I approach my clients. It's either yes, maybe later, or let me introduce you to someone else. So that's it. And I'm Miriam with CDC Small Business Finance, and I will put my information up on the chat log.
Thank you, Miriam. And we'll just start with you again, if you wouldn't mind, just diving more into that application process. Can you describe the application process for the loan, including how long it usually takes, and how soon a business can typically get the funding or get approval? And what are the steps a small business should take to access capital with your organization? And we'll just start Miriam and Joyce and Fernando.
Okay, yeah. So I definitely am all about, you know, not having your credit pulled. So definitely don't apply online. I also, you know, anybody who refers a client to me, or if you reach out to me directly, I always schedule a call with you because I don't want to just pull your credit or even have you apply if, like, maybe I'm not the person that can help you. Like I said, we have a lot of great resources besides SBDC, whom I refer a lot to, you know, everybody on the panel I refer to. So, you know, that's how I start my process, is really just a conversation with you to see, like, for 20 minutes, if I'm a good fit for you, if you're a good fit for the loans that we offer. And if you are, then I send you a link to apply, and that application comes back to me. Once you have completed your application, same day or next day, I will review it to see if it's still a good fit. You know, I might come back to you with some questions, or I might say, hey, at this point, I can't help you. But if everything looks positive, then I go ahead and have my assistant pull your credit. And then I review it again once that credit comes back and assess from there. Maybe I might have some more questions, need some more documentation, or maybe I know right at that point that you are a good fit for us and I'm going to pre-qualify you. So once you've been pre-qualified, so that process of pre-qualifying could be 3 days, or it really depends a lot on our conversation back and forth and what else I need from you. But once that process is complete, if you're an existing business owner, we can move as fast as 3 weeks to get you funded. If you're just looking for what we call an easy use of proceeds, which would be like working capital. But if you are a startup and your projections based and you need tenant improvements, you need equipment, you need a working capital, inventory, kind of like the whole everything that we offer for our loans, then that will probably take 30 to 45 days, maybe even longer, depending on how long your tenant improvements happen. But we do fund you earlier than that to get your tenant improvements started. And then we kind of, if you're doing a startup, but if you're an existing business owner, as you can tell, the funding process is a lot quicker. And so that's kind of how the time frame works. And as I had mentioned before, we collect the same package that a traditional lender would. So if you're an existing business owner, we're going to ask for the last 2 years of business tax returns, personal, you know, financials as far as in P&L and balance sheet. And then if you are a new business owner, we're just going to look at your projections, your business plan. You know, hopefully you're connected with SBDC and you've been working with them. And then we're going to look at you personally, because if you're a new business, then we want to make sure that you could support yourself financially, that you have enough income, that your expenses aren't too much, you know, for you to support yourself personally, because we really want that's like part of our due diligence, is to make sure that you can support yourself personally, which is, in other words, you have your own cash flow personally if you're going to start a business, and then you could, use our money solely for that business plan and projections and what you're going to do with your business. So that's kind of our way of verifying that. And then usually, if you've worked with SBDC or, they're really excellent at projections. They know what we're looking for, business plan. And if you have the experience, then, that could be very much doable. The one thing I am going to say is we are an SBA lender and we have some other products as well, but, we won't finance if you're in the adult industry, marijuana, or right now the trucking industry. We're closing shop at that. But yeah, I think that pretty much explains it.
Hey, everybody. Same as Marianne. So I like to have a conversation with the clients, see if we're a good fit for our loans, for our term loans. So we'll take a look. We'll have a next conversation about 10 to 15 minutes, and I'll ask them several questions about their business. What's the purpose of the loan? That's the key thing for us, since we're mission-driven finance. And we'll check to see if he has the capacity to be able to repay the loan back. And if he's not quite ready, because I speak to a lot of people every day, if they're not quite ready, I'll refer them to the SBDC or the San Diego Women's Business Center so they can get them ready. If I see they're ready, we'll send an application for them to apply. The good thing about us, we'll do a soft pull on the client, so we'll take a look at the credit before, so we're not going to be able to hurt them. The great thing about it is, after we have the conversation, after the invitation, they apply, they fill the application, I'll take a look at it, see where the right fit. I'll send them a link so we can download the documents. We usually ask, like Miriam, for 2 years worth of taxes, 3 months worth of bank statements, business and personal, depending on the amount. If it's over 25K, we'll ask for the profit and loss and also for the balance sheet. Usually, depending how busy our underwriters are, we usually take about 1 to 3 months to fund the application. And at the moment, we also don't also serve people in the adult industry, anybody with cannabis, or if they're selling alcohol, but we will do trucks. We'll do trucks, and we'll also do for food trucks also. So if anybody's ready to start a business, please come check us out. Thank you.
Yeah, so a common theme, I think here, everything starts with the conversation, with us as well. But our typical time, to get a deal kind of underwritten and funded is usually around 10 business days. That can be delayed a little bit if we're using collateral, because we'll have to, potentially open escrow and pull title and what have you. But for the most part, about 10 days, business days is usually where we're at. We're typically, it really just depends on the collateral that we're using, right? So if it's accounts receivable, we're going to review that, make sure that it's all completed work, make sure that there isn't an issue with us, having the assignment of payment. On the PO side, we're really looking at making sure we understand the contract, what's the deliverable, and then who you're working with also, right? Because you're going to have suppliers in that case are going to be very important. We want to make sure that there's a good relationship there, and there aren't any issues on that end. As far as industries, it's really B2B for us. So we're gonna, the only industries that we can't really touch are, unfortunately, construction, healthcare. Those two are really the ones that are a little bit more difficult for us. Other than that, we're fairly industry agnostic, and we will do the adult industries and all the fun stuff there. So let's see. Yeah, I think that's about it. But we're again a little bit more aggressive, really focusing on the asset. Usually within about 2 weeks, we're able to get a deal done, and then industry agnostic for the most part, other than construction and healthcare.
Awesome. Thank you, Fernando. DeWitt, Andrew, and then Luis.
All right. So with us, the application process is pretty simple. And if it's a smaller loan, like something up to 150,000, it should be about a 30-day process. Some of that is kind of driven around how responsive the borrower is. So in other words, if you apply today, you send in all the required paperwork tomorrow, then it should be a 30-day process, start to finish, from the time when we get all the paperwork until the time that you actually get a decision and are able to access the funds. So stuff up to 150,000, the application process is you fill out a 2-page application. You return the application with your most recent business tax return, most recent year-to-date financials, a couple business bank statements, And that's basically it. It's a fairly easy process. Everything above 150,000 gets fully underwritten. And when a bank refers to something that's fully underwritten, generally it means we're doing a deep dive into collecting several years of business taxes, several years of personal taxes, personal financial statements, business bank statements, maybe even personal bank statements. So stuff that's fully underwritten is going to take a little bit longer. So that typically is going to be like 45 to maybe even 60 days. The steps that a business owner should take to access capital with us, the first thing I would say is, definitely have a conversation with the SBDC. They're a phenomenal resource and know everyone in town, everyone on this panel, lots of other folks that aren't on the panel, and they'll be able to kind of steer you towards which capital source, whether it's a bank or a non-bank lender, could be the best fit for what your specific situation is. So they'll help you cut out a lot of the frustration that other folks are going to go through, in reaching out to 10 different banks and getting a no from 10 different banks. And then, finding someone like Fernando or Andrew that are going to be way more flexible than a bank and might be able to say yes, maybe even the same day. So I would say talk to the SBDC before you talk to a lender. Find out, if they have any suggestions or recommendations as far as which lender might be the best fit for you. After that, I would say set up a call with the lender, talk to the lender, tell the lender what you're looking for. One important thing, probably with all of us, is to really focus on the weaknesses in your business and in whatever your credit request is. And when I say weaknesses, we're, as part of everyone's underwriting, we're going to find out any bad stuff or, stuff that you think is bad stuff. We're going to find it all out. So, don't gloss over losses. Or hypothetically, if you have a BK that's 5-6 years ago, tell the lender up front, because a lot of us, might say, well, it's 5-6 years ago, so as long as you've reestablished credit, not a big deal. Or foreclosures, if you've ever had a property that's been foreclosed on, or repossessed, stuff like that, let the lender know right away. Some of us can work through those issues, some of us might not be able to, but as long as you're upfront about that stuff, it's going to be a less frustrating process, because then the lender can give you a quick answer and go, yeah, that's not a big deal, we'll work through it. Or, you know what, I can't work through it, but maybe this other lender can. Industries, we're very industry agnostic. We are a federally chartered commercial bank. So that means no cannabis, stuff that we'll steer away from. I mean, anything illicit. So chances are, if you have a question about, well, would you guys bank this industry? Probably not. If you have to ask, probably not. But the kind of industries that we do bank, manufacturing, distribution, professional services, marketing companies, tech companies, consumer product companies, several rental car companies, transportation companies, shipping companies, lenders. We even bank lenders. So really, like, you name it, as long as it's B2B, then we probably bank it, just as long as it's nothing illicit. And that's everything for me.
So for Marble Bridge Funding Group, you spend time with me, and I basically, in one phone call, talking to you about your business, how long you've been around, what do you do, what's happening, what you need the funding for. In my 23 years experience in underwriting, I usually be about 98% correct that I can get you in here if we go forward. So at that stage, after that call, and you'll have some idea how we work with you. You would send in your package, and like many of the lenders here, we'll gather financials. They don't have to be CPA audited, just what you produce. We gather tax returns, some bank statements, typical things that most of us are asking for. And if I got those the next day, we would have a phone call. I'd walk through them, and then I can really zero in on how we're going to be able to help you, because the numbers will verify what you told me. And after that call, you understand how we're exactly going to operate together, and understand your business. We'll proceed to underwrite the application, and usually we'll have it done and ready to fund within 10 working days. But really, In my years of doing it, it's the client getting me the documents I need in order to get it done. So we can move as fast as you can move on that particular end. And we're working with startups. So for those of you who don't even have revenue yet, but you may in 30 or 60 days, I brought in clients that are working off projections and telling me what they're going to have and what they're going to need us for. So I can work with very, very young companies. I can work in the construction trade, progress billing, milestone billing, software companies, engineers, staffing models, food models, doing business with Amazon. I've done it all over the years that I've been out here. The only industries that we don't fund are doctors, dentists, chiropractors, and we don't do the cannabis industry, but we do CBD products. And I actually have a call this afternoon with a CBD manufacturer that's selling cosmetics into retail. So we do follow that particular piece, which is different than just doing cannabis with CBD or THC. And that's it.
It's my turn. Yeah.
Yep, Luis.
Yeah. Usually the time for us to the first conversation to the time to deliver the money is we hope and we shoot for 2 weeks. What happened in these 2 weeks is we have a first conversation with the founder or the CFO or the person in charge of this process to realize and see clearly that we are the correct match for the company. And that there is that they are in the industry that I mentioned before. They are business to business and no business to consumer because we don't do that. So they are in the correct industry. They are in the correct format. And, and the margins are there. The operations revenue are there. We like to be in with companies that they already have 24 months in operation with a revenue of more than $500,000. If the company is not profitable yet, we don't mind as long as the year's revenue is growing. And the growth year after year, we expect to see at least 20%. So after this conversation that we review the industry, the margins, the growing, the business model, then we send you a link from our system that is called Kodak. And that Kodak will connect you with usually is QuickBooks Online system that you might have or any other. And that is immediately the same. And my system will extract all the information that we need. Also, we ask you for if you have any debt. We would like to know who you owe money to and what's the terms. And also, we would like to see a list of your customer base, or at least the most important ones, with your monthly revenue. So what we want to see there is you don't have a dependency with the majority of your income in 1 or 2 customers. So that's the 3 steps. Once you do that, I present your company with the investment committee and the underwriters. And then if everything goes okay, we jump in a phone call or a Zoom conference, I should say, with you. Because most likely the underwriters will ask you questions about your numbers and what are you going to do with the money and how do you pretend or intend to get the repayment money to us. Once they say okay and they give us a green light, we give you a term sheet with the amount, the terms, and price. That's your time for negotiate. You can say yes, no, or like I say, negotiate. And when we reach an agreement, we do a very fast review of your numbers, and then the money will get directly to your bank. So that's usually the process. So like I say, it takes, we hope it's 2 weeks. Sometimes takes a little more than that. If the numbers are not there or the financials are not in place or there is some information missing, that's usually what will get a delay. But like I say, it's usually 2 weeks. And then after that, the fast due diligence to the company. So everything match what you just said. And that's it.
Awesome. Thank you, Luis. I'm going to start with you again. And then if any of the audience has a question, feel free to put it in the chat and I'll be able to ask that to the lenders as well. But just overall, avoiding any pitfalls or success strategies when applying for lending with your institution. If you want to give a real world success story as well, that would be great.
Yeah.
You go with Luis, Andrew, and then DeWitt.
Sure. We are, and I don't know, someone in this panel said that we know all each other and the industry is very small. And when I do the know your customer, so that's good for all of us, because if I refer to one of my friends around here, is because I already think that your company is a good match. And because with difference is depending on what you're looking for or you need on your companies, is that one of us is going to be a very good match. If you have a nice house that you don't mind put it as a collateral, if you have a perfect credit score, if your business model is very square, clean cut, easy to understand for everyone, most likely I'm going to be expensive for you. Most likely, one of my colleagues here from the banks are going to be much better price for me. So my successful story is one of those companies, and I have several, but that they say, listen, the bank don't understand my business, and I don't either. My house is already with a lien, or I don't have a house that I can put as a collateral, and no one is paying attention to me. That's my successful story. Like I said, I have a couple because we take more risk, we charge more, and that's what I want to pinpoint to the audience, that the difference in between all of us is someone is willing to take more risk than others, and therefore the price of your loan is going to be higher or lower. So I didn't give any stories, Brandon, but
it's okay. You don't need to. Thank you. I know Andrew's always got a good story, and
exactly,
yeah.
Andrew.
All right, so let's see here. Pitfalls and going for funding for any of us. And this was said earlier, I think, by DeWitt. We all do background checks. We all do things to make sure we're doing the right thing for you and that we're going to make the right move for the company when we're putting out our funding. So everything that, when you talk to your lenders, tell them everything that's going on, the good, the bad, the ugly. Let us know right off the bat what's happening, because that will be critical for us, creating success for you, or, giving you advice on how to move forward. And when I said earlier that I get about 98% of the loans approved from just the first call conversation, the 2% are when somebody didn't tell us something and we found it later down the road. And it's really awful because we're all putting time and energy into it, and we don't want to say no. We want to say yes. So please be, upfront at that end. From successful strategies, I work a lot with SBDCs, and they are fantastic. The services are free. That's why we're on this call. That's why I've been working with them for 23 plus years. You want to work with them. You want to work with all the consultants they have. They have so many different things that they can do for you, so many talented people, so many knowledge bases for marketing, sales, tech, getting certified. They are just critical for small business, and you need to work with them. And it's free. So why wouldn't you work with them? I mean, you will learn a lot, and you will avoid a lot of the mistakes, and you also will help you, increase your success. The predatory lending traps are out there, and I can't be, I really want to shout this out to everybody. There is a major problem in this country with small businesses that are being attacked by predatory lenders. Essentially, we call them MCAs, so merchant cash advances. I mean, they are getting calls daily, they're getting emails. I mean, it's all over the place. And every day, I run into clients that have these loans, and these are like 60% interest to 120% interest loans. There is no way this is going to help your business. And people take them out of desperation. It buys them some time. But then for us as lenders to get them out, it can be extremely difficult. And they do things that are just awful. And so when you see these guys coming in and saying, hey, we can get you money in 24 to 48 hours, don't worry about your credit, fill out this application. You get involved with these guys, and the end result is you'll run out of money very quickly because most of them are quick paybacks. They take the money directly out of your bank account. And then you find you need more money. They won't give you more money, and people reach out to the next predatory lender. And I've seen it time and time again. I had a $6 million business that is really growing now. And, you know, they survived COVID. They got idle money that helped them survive. They're really on a roll. And they got $1 million of these guys. And there's no way to get rid of them. And there's no way for me to help them because they file liens against the business. In addition to that, some of them file stipulated judgments. And I know that may be a little sophisticated, but essentially they're signing a document that they admitted they committed fraud. So as soon as they have a mistake, as soon as they run out of money in the bank account and the lender can't get the money, they file a judgment automatically. There's nothing you can do. So you really want to steer clear of these guys. If you don't know if they are or not, talk to your local SBDC, and they'll look at the information and they'll tell you very, very quickly. In addition to all that, and it doesn't really come up in these panels, but I always bring it up when I'm speaking, there are times where we can partner with other lenders on this panel or other lenders within the state that are community, we call them CDIFs. It's like what Miriam is doing, and they provide loans to businesses, and there are others that do. And sometimes you can have more than one lender, and there are relationships that are formed. We have many that we've had for many, many years. I have one, when we talk about success stories, I had a small minority business doing a couple $1 million a year. SBDC's been working with them. They got them to me, and their financials were completely wrong, and their tax returns were wrong. And, you know, I'm going beyond just being a lender. I'm really trying to help these people. I set them up with a CPA bookkeeping group to help them clean up everything they had. They had all sorts of issues. They had MCA loans, those bad loans. They also had those. And I was helping them, you know, how to get out of those loans and how we're going to help them do that. So we have SBDC, we have a CPA group that's cleaning up the numbers. We had to spend months trying to understand their business and re-asking for information because they didn't have it presented properly, but we finally figured it all out and we approved them. In addition to that, they needed even more money than I can get to get out of the MCA, these really bad loans. And I found them a CDIF lender that can easily work with us, and they're in the process of getting that done. And by the time I brought them to that lender, I'd cleaned up enough of it that the lender can now understand the business and will say yes. And then when we're there, this business can double or triple within just a couple of years. Their biggest competitor retired, and they're overwhelmed with business, and they can't take it on because they're you know, weighted down with these MCA lenders that have 60% interest. So if all goes well, we're actually signing them next week. The other lenders in the process of getting the additional funds approved. And so I bring more to the table than just me. I understand the marketplace after all these years, and I really go out of my way to try to help these small businesses get things done. So there's a little bit of a story to go with it.
Awesome. DeWitt.
All right. So let's see. So the first thing that I would start off saying is that everyone on this panel is what I consider relationship based. You know, so it's probably very unlikely that any of us blindly get an application in our emails and just decision it without actually speaking with the borrower or speaking with the business owner. So I would encourage everyone to form a relationship with your lender, that's built on trust, that's built on responsiveness, and don't give in to getting on the internet and just searching business lending. Oh, here's 10 business lenders, I'm going to apply with all of them. And all of them are going to probably approve something or another, but kind of like Andrew said, it's a predatory trap where you sign the documents and then a couple of weeks later you look at your bank account and realize it's debit, it's gone negative, because in the agreement, in the tiny type that maybe you didn't read, it gives the lender the authorization to ACH into your bank account and pull out money on a daily basis or a weekly basis. And kind of like Andrew said, once you're in one of those situations, it is a death spiral. Like, getting out of it is incredibly difficult. Your only way out is really pay off the predatory lender or try to get a loan somewhere else that's not a predatory loan. But that other lender is going to go, why'd you get this loan from these crooks in the first place? We don't want to work with you because you're already kind of going down that path that you really don't want to go down. So don't just blindly apply for anything online. Form a relationship with your lender, meet with your lender, talk to your lender, find out, hey, I might only qualify for $100,000 a day, but what's it going to take to get $1 million? What do I need to do to get the kind of capital that I have my eyes set on? That might take me a couple of years to kind of build the company into a position where it could access that kind of money. But build that relationship with your lender so the lender knows, you're not just in it for one loan, you're in it for the long haul. Other things that I would kind of include in that, so having financials, and actually let me backstep up. The other piece of advice I would give is working with experts. And Andrew kind of touched on this a little bit, but in a lot of cases, small business owners might feel like, well, you want us to work with experts, but we're bootstrapping. We don't have money for a bookkeeper. We don't have money for an expert attorney. We don't have money for, the best CPA around. But the cost of not working with experts and trying to figure it out on your own. You might not have experience, when it comes to financial accounting, financial reporting. And maybe you just say, it's not that important, or I'll figure it out on my own. And then you apply with a lender and send them the financials and then realize, like, oh, wow, there are so many mistakes here. There's stuff miscategorized, mislabeled. Now it's going to become an even more costly process to go back and fix the financials that are in error. So once you kind of have lending on the horizon, even if it's like, we want to get a line of credit next year, as soon as it's on the horizon, you need to get your financials in order, work with a good bookkeeper, work with a good CPA. If you're just kind of at the early stages of forming a company, get some guidance from an attorney. The SBDC is really like your first stop that you should go to for all of this stuff. A lot of the stuff that they do, a lot of the advice, the consulting that they do, you don't pay for it, so take advantage of that resource and get help with all of those things well ahead of, when you're actually talking to a lender. Other things here, so those are my tips for pitfalls. Let's see here. I think, one success story. Let's see. So lots of success stories. I guess one that I'll just highlight is a client that is a growing business, and a lot of business owners, get really excited when they get the ability to take on more contracts and more business and grow. It's super exciting. It's great. The one thing that they don't sometimes think about is, how are they going to manage that growth? Do they have the internal capital? Does the business have enough money to take on all of those extra jobs? Does the owner or owners have enough money to inject equity or inject money into the company to support all of those additional jobs? And in this case, it was a client of mine that received a lot of additional jobs, a lot of additional contracts that they were thinking they might not actually win or get awarded. And sure enough, they won all of this additional work and called me and said, DeWitt, we've got a problem. We're making too much money and we've got all of these additional jobs that we want to work on, and we need a larger line of credit. And in this case, we're able to give them a much larger line of credit that is only secured by what's called a UCC filing or a lien filing on all of their business assets. So now this company is able to take on all of these projects, continue growing at a really good pace. But again, just going back to the first piece of advice, talk to the SBDC, form a relationship with your lender. Don't just apply online, and really do what you can to kind of work with the best in class, the experts, because and there will be a cost, but the cost of not doing that, not working with experts, not having a good CPA, not having a good bookkeeper, will be much more costly in the long run. But first step is definitely reach out to the SBDC.
Well, I think that's a great place to leave it. I also want to just highlight that Miriam did put in the chat that they do help with refinancing predatory lending. Again, all the lenders do have their information in the chat. Please feel free to reach out directly. That's all the time we have for today. We do have this monthly to meet lenders. The next one is going to be May 10th. Also to keep in mind, June 20th, we have our next Small Business Expo. Just pay attention to either the SBDC newsletter or the website, or feel free to email me directly as well, and give you more information. With that, just want to say thank you so much for our lenders. Really appreciate your valuable time. Always good to see you, and looking forward to seeing you hopefully soon at the Small Business Expo. Okay. Oh, and Marissa just put the link to register for the expo there. Thanks, Marissa. You're the best. All right, guys, take care. Bye-bye.